Is Australia done with outsized interest rate increases? Today, we're going to have a look. We're also going to look at what a comparison rate is after one of our viewers actually asked the question. So let's dive in, starting off at the top. Let's have a look at what's going on. So we can see the Australia will return to a 25 basis point rate increases as veteran economist Saul Eslake has rejected a consensus that maintaining further outsized rate increases is needed to slow inflation. Eslake, who studied the economy for more than 4 decades and is former Australian chief economist at Bank of America Merrill Lynch, sees the Reserve Bank shifting to a 0.25% rate hike in September. And he says, as things stand at the moment, I'd expect him to do 3 more 0.25s, as he actually mentioned that it looks like the Reserve Bank is done with the 50-point increases. Now, the Reserve Bank of Australia has delivered 0.5% rate hikes for 3 meetings in a row, so 3 months back to back. And we've seen the official cash rate hit that 1.85%, which has accelerated the tightening cycle, which began in May. And we initially came from a 0.1% cash rate, now to 1.85%. Most economists are actually expecting a 4th 0.5% move in September to rein in inflation. Now we can see the Reserve Bank, they're eager to get inflation to that 2 to 3% target. What we do know is the Reserve Bank only gets this data every quarter. So every 3 months they're getting the data. So they do fly blind a lot of the times. We can see the economy ahead is expected to slow down. By 2023, they're sort of saying that core inflation will go down from 6% where it is at the moment to 3.8%. And then again in 2024 down to 3%. So it is expected for the cash rate to reduce. We can see from really May this year, there's been 4 rate hikes. Of the 4, 3 of them, the last 3 have been 0.5% increases. So we can definitely see that's played out. I mean, we look to the US, they're expecting inflation to hit 8.7% in July alone. That hit officially 8.525%. So it gives a bit of optimism for Australia. Although we're not going to see that data for a little bit yet, we can already start to see that maybe these rate hikes are already having an effect, especially with the Australian economy. We're so geared in a property sense that rate hikes probably have a furthering effect on the economy in Australia than it might have with other countries where they fix in their loan for a longer period of time. Now, from the Reserve Bank's point of view, they gave a little bit of wriggle room this month to adjust the pace of tightening. Now, Philip Lowe actually said in his statement that there's no preset path. Now, I think he's probably learnt from when he was coming out previously talking about the Reserve Bank in 2021 was saying that rates were going to stay on hold until 2024, and they didn't foresee that Australia would get pulled into what the rest of the world was going to be happening. So the global inflationary pressures, the Reserve Bank at the time thought we weren't going to get pulled into it. Turns out we did. And now the Reserve Bank is probably being very more cognizant, more aware, a little bit more careful about what they're actually saying and keeping their all avenues open, because they did get slammed for having said previously they weren't going to move rates until 2024 and reversing that course quite quickly. Now, the Reserve Bank released its quarterly update in terms of its economic forecast, and it showed that inflation would peak at 8%, which is most likely going to be happening later this year, and then return to that band that they're targeting of the 2 to 3% by late 2024. Now, the economy is expected to grow, albeit at a decelerated rate, around that 3% or 1.8% from 3.2 down to 1.8. So they are expecting it to grow. Both CBA and ANZ's chief executive officers have both said that they can't see the country going into a recession, but we're going to find that the growth will slow down. So definitely interesting to see how that plays out. Maybe rates might slow down. The increase in rates might slow down. They are predicting that the cash rate is set to get to that 2.5%. So we're currently sitting around that 1.85, and as it stands, most likely going to see an increase, whether it's 0.25 or 0.5 in September. Now, we did have a question from Susmas asking about what a comparison rate is and how can you determine what the best rate is? Do you look at the final rate or do you look at the comparison rate? And we've got an example here of what they were talking about. So previously we had a video, and in that video, there was some rates that the article had demonstrated. So we can see, I guess, an example here with Westpac, Macquarie, Police Bank, Capricornia. And we can see that it's got a rate here on the middle bit. So let's pick out Macquarie as an example. For their 5-year fixed at the time was 5.39, but their comparison rate was 4.11%. So Susmas, the real important thing to remember here with the comparison rate is the comparison rate looks at all the fees and charges and everything that's effectively applicable on the loan for a term of 25 years. So it looks at a 25-year term. Usually the loan amount that is used by all the lenders is $150,000, and it sets a really even bar in terms of everyone is using the same statistical data on the same loan, 25-year term, $150,000. And when they plug in the numbers, annual fees, setup fees, and costs, what that does is it spits out at a comparison rate that factors in all these different avenues. Now, what we find here with Macquarie's fixed rate, they have a higher fixed rate. And for the first 5 years of the 25, you're on a higher fixed rate, and then it would likely revert to a lower variable rate. And let's just say that's 3.79% at the time when they did this comparison rate. Well, that's where we can see the comparison rate looks at a 5-year loan at 5.39%. Then it looks at the remaining 20 years on a variable rate, which let's say at the time was 3.79. Now, obviously variable will float with the market. So when we do the comparison, they're only looking at it at that stage. And effectively, if there's annual fees, for example, there might be an annual fee of $250 per year. There might have been a setup fee of $250. That's all factored in. And that's why the comparison rate here is much lower than the actual fixed rate you're getting. So comparison rates can be great. They can also be hard to compare because if you're fixing in for 5 years, you might not necessarily be worried about what the loan reverts to, because after 5 years, you could refinance and move. So I guess to answer your question, should you look at the headline rate or should you look at the comparison rate? It really depends on what you're looking at doing. I think for fixed rates, definitely want to be very aware of what fixed rate you're getting. The revert rate probably necessarily isn't that important, especially the longer your fixed term is, because what you're going to find is probably at the end of that fixed period, you're more than likely going to look to refinance. For variable rates, the comparison rate can be probably a little bit more handy because it does then look at all the fees and charges and setup fees applicable and help you compare, lender to lender. What you do need to be careful of is also sometimes the differences in costs can be more exacerbated because the comparison rate's only looking at a $150,000 loan, whereas if you've got $1 million or $1.5 million loan, sometimes the fees and charges might be minimal. The difference in rate might be better. And that's where working with a broker, you can really get an understanding of what's going to be more suitable because there's some lenders that give you like cashbacks to refinance. There's others that you can get certain fees waived, which the comparison fee takes into account. So definitely a very good question, Susmas. Hopefully that answers it. As we talked about earlier, it's looking like the oversized rate increases might be slowing down. Definitely be interesting to see in what happens in September, guys. Leave a comment below. What do you think is going to happen? We're going to have a 0.25 or 0.5% increase this month. Here at Hunter Galloway, we're mortgage brokers. We're based in Brisbane, but we deal with people Australia-wide. So if you're living in Australia, looking for a great broker, we can help. Call us on 1300 088 065. If you're living in Australia, Perth, Adelaide, Sydney, Melbourne, Brisbane, give us a call or visit our website, huntergalloway.com.au. And guys, as always, leave a comment below. We read everyone. Love to know if you have any questions like Susmas there. This is the second question we've answered for Susmas. So hopefully that helps you. But if you have something that you're worried about or concerned about or you're wanting to know, leave it down below and I'm happy to answer it in a video. Thanks, guys. We'll see you again soon.